Welcome to today's video on another scalping strategy especially designed for 1 minute time frame. Maybe you ask yourself, why should I trade on 1 minute chart and why should I do that? The question is not that complicated and the answer also is so simple. This is for those target audience who doesn't have so much of time. You don't have like hours to spend to see, check the news, check the chart itself. So you need something fast and furious. And maybe this is your second job or a side hustle. Even if you are a trader yourself and you want a part of your volume of your trading account to be traded in a fast pace, so this is for you guys. So let's waste no more time and dive right into it. You can use it on any market, on crypto, indices, Forex, it doesn't matter. But you have to keep something in mind. If you're trading on Forex, you have to trade it on major currencies. So do not go for exotic currencies at all. I do not recommend that because due to lots of factors, especially about the volume is being traded. You can trade on gold, or if you're choosing to trade on cryptocurrencies, I highly recommend to trade on the major ones like Bitcoin and Ethereum. So what we really need to get it done is it's made out of two main indicators, and we use one of them twice. So first one we're gonna need is two EMAs. I made it favorite here from before. If you don't know how to work with TradingView and how it's get done, previously I made a complete dedicated video about it, and I told everything about this platform and how to work with it. But you can just simply search for EMA and it's here. You can make it favorite and click twice on it. Then firstly I'm gonna go to the setting and change the first one to 50 and go to style. I'm okay with blue color, maybe a light blue, and the thickness is okay for me. So this is my faster EMA. And then I'm going to my smooth EMA and I put the second EMA on 100. Yeah, just like that. And I make it my main EMA. I leave the color a little bit darker and a little bit thicker, so I know this is my smoother EMA. Previously I made another video about moving averages and what is the whole concept about and how it's get done, how it works. But long story short, if the faster EMA, in this case here the 50 EMA, is going to cross down the slower one, 100 EMA in this case, we call it a death cross, and the price tends to change the direction and go for a downtrend. As you can see, it went down, and then here the opposite is the same when it crosses from bottom to top. We call it a golden cross, and the price tends to go up for an uptrend. So we're on 1 minute time of gold to US dollars, and the next indicator that we need to get it done is the stochastic, which I made a video about that previously, two completely dedicated video about it. But in this case here, we don't want the stochastic RSI or the stochastic. We want to use another type of, let's say, the optimized version of it. So I'm gonna search for a stochastic. Yeah, stochastic oscillator. We need this one by Luke, so I'm gonna make it favorite. Yeah, stochastic oscillator for profit trailer. So we need this one. I'm gonna click on it and bring it on the chart. It's gonna pop down here. There you have it. So let's go to the chart, make it full screen, and see how we can trade with it. The strategy is so simple, but before getting in more details and talk about the fact how it's gonna work out, you need to know when is the good time to trade on any market rather than the crypto, because the crypto market is 24/7, so that's not going to work out in that market. But if you want to trade on Forex, the best time is the London session, and even if you want to make it better, it's like as you know, is the overlap of London session with New York session. And in the case of cryptocurrencies, there is a limitation, although the market is 24/7, but I highly recommend that do not trade on weekends because the volatility is low and the market makers can just do some mischief in the market, which you don't want to be a part of. Now let's get to the details and see how it's going to work out. So long and short positions. For long positions, we need 3 sets of rules and some other noticeable stuff, which I'm going to tell you right away just in this video. And first thing, we have to wait for this golden cross happens here. Let me change the color. Yeah, this golden cross happens here. So the 50 EMA crosses 100 EMA up. So it means that we have a confirmation that the trend had changed. Next, we know that this area here, this plus 70 area and this minus 20 area here are oversold and overbought zones. So we know that when we are here, we are looking for a price reversal. We have to look for a confirmation, and keep it in mind here. Let's talk about this too. You cannot only rely on one indicator to trade, because for example, you wanted to say, okay, the price will reverse from here. If you only want to trade with the stochastic oscillator, and you want to for the price to go back down, but it didn't. So you wanted to take a short trade here in this case, and due to the signal of stochastic, and you took a short trade here and it was a stop, a couple of stops right after each other. So you don't want to do that. It's only confirmation that we get from these kind of oscillators and let's say indicators. We have to mix them up with each other. So first confirmation is from EMA. Second, I have to wait for a pullback. So I do not have a pullback here until here. Maybe you ask yourself, I've lost a couple of movements in the market. So this is all about this strategy. This is how it's gonna work out. If you want other kind of trading strategies, you can just check them out. I have a couple of them uploaded too, but this is how it's gonna work out. This is the rules and you have to stick to them. So first, golden cross for the long trade. Second, we have to wait for a pullback. Next, we go down here to our stochastic oscillator. Let me make it bigger. Yeah, in this case here. So we must see that we have been in this zone here, which is oversold zone, and then we must see that the price goes above it, and we have a cross down here too. Let me go to the setting, change the color to something like red. You can see it, beautiful. So we had a cross down here too in the stochastic. If you don't know stochastic, how it works, just check my video. But we had a cross up here and the price went above it. So the rule is here, the price must go down into the box, then come above it. Then we have a pullback here and it was right after golden cross, so everything is okay. I'm gonna enter a long trade right at the close of this candle here. So where to put the stop loss? Some people say put it at the 100 EMA, but I say put it at just slightly below it. So where slightly? This could be slightly, this could be slightly. I go back, I look back not so long, somewhere around here, just here, somewhere around here. I see, okay, the price had a reaction to this area, so slightly means here. So this is a good place to be considered as a swing low. So I'm gonna put my stop here, and now I'm gonna take a trade. My target point is going to be 2 times bigger than my stop loss, so it's gonna be 1:2 risk to reward ratio, and it worked out beautifully. Because it's a 1 minute time frame and the profits are so small, you can see it was like 0.13% of profit. I highly recommend to use higher leverages like 20, 25, even up all the way to 50x leverage. Maybe you're surprised with the fact that, wow, that's too much, but with proper risk management system and position sizing, and let's open up a bracket here. If you don't know how to position size and how to control your risk management, guess what? completely dedicated videos about those two, which I'm gonna leave the links again down in the description. Make sure to check them out. But let's make some other examples. Let's take a look at here. So I had a golden cross in this case for another example for long trade. I had a golden cross here, but my stochastic is not like giving me that kind of being sure part of the job that, okay, it's okay, you have to go for a trade. You see, it didn't go inside of the box completely, both of the lines. It didn't go in. So although it had a beautiful pullback here. Another thing to be mentioned, and you have to keep in mind in order not to make wrong trades, is that the price is better to always not to be in between the EMAs. So in this case here, it's in between, even it breached out for a short amount of time down and it crossed the 100 EMA down, or when the price is between them playing, it means that it's a range market and the market is in indecision. So you want to only follow up the rules I told you. So we only want the pullback or a candle close above of the 50 EMA. That's what we call it, a good signal. So in this case here, we had our pullback, it breached down, it doesn't matter, we didn't want to take a trade. It wasn't even a good situation for a short trade because the price is still mainly above the 2 EMAs. And we didn't have a death cross, or let's say the cross of the shorter EMA down to the 100 EMA. So in this case here, after a pullback, I had a strong candle close above both of the EMAs, and when I look down here, the price went into the box to the oversold territory of the stochastic oscillator, and then after a cross it went above it, and there you have it. So let's enter a long trade here, put our stop loss where? So this is the best place to put our stop loss because this is already both below 100 EMA and this is the latest reliable swing low. So I'm gonna put my stop loss here, go 2 times bigger than my stop loss for my take profit. So it's a 1 to 2 risk to reward ratio, and guess what, it was a successful trade. And then another pullback happened here right after that pullback, and I check down here, yeah, everything is passed. So I'm gonna enter a long trade at the close of this candle, stop loss just slightly below this latest swing low, and go 2 times bigger than that. Yeah, another trade, beautiful, and it was another profit. So I had another pullback here. Yeah, everything is passed. I have the breach out of the stochastic here, a cross up, price went up. So I'm gonna enter another trade here, put my stop loss on the latest swing low here, and 2 times bigger than my stop loss, gonna be my take profit, at another beautiful trade here. So my high recommendation is when you see a golden cross and then you take at last 3 trades, stop trading and let the market to decide the next movement, and then decide for the next movements. As you can see, the market changes direction just right after 3 trades. Maybe sometimes it's going to be a long trend, uptrend or downtrend, but stop trading, let the market decide, then go with the trend, because remember, trend is your friend. So really good example for short trade here, just right after this beautiful long trade. So we had a cross down here, then guess what, we have to wait for a pullback, which was here. We have to check the stochastic oscillator. Yeah, we had a cross down, then the stochastic went out of this overbought territory. So I'm gonna enter a short trade, but the close of this candle here, stop loss at this latest swing high, which was here, and risk to reward ratio of 2, and it was a successful trade. You can see, beautifully done. So this is how you do it, and this is amazing. So I made a back test on this strategy, and I came up with the winning ratio of plus 90%, but it's like I put it on 90. So you can do your own back testing and do 100 trades back testing on the different markets like one on Euro USD, one on gold to USD, and one on Bitcoin to USDT, and then find it for yourself. And then let's say we have a trading size of $100, 90% winning ratio. The take profit is 2 and the stop loss is 1. The number of trades, let's say it's gonna, I could see that it can give me like 10 trades per day, but let's make it half time. I want to be realistic. So 5 trades per day is going to be in a month. Is going to be 150 trades in 1 month. Let's say that we don't want to spend that much of time on the chart. And the leverage, I highly recommend to trade on 50x leverage, but let's put it on 25x leverage. And now I want, again, in my previous videos I pointed out this, but I highly recommend that you have to trade on a good exchange, which is with really low fees, because you're already trading with a small amount of movements of the price. So the money you're gonna make is too small. You don't want to spend all of that on fees. So I highly recommend you to trade on Bybit. If you like other platforms, you can try them out. You can check them out on CoinMarketCap website. How to do that? Guess what? I made a video about that too, to find the best trading exchanges. How to do that? You don't need someone to tell you. You can just check it out for yourself. So let's run the strategy, and you can see it is crazy. It is crazy. You can turn $100 into 200k in 150 trades with this system. Although this is just an average, or there are lots of things in between to play in the market, but this is an average which can tell you how crazy this strategy is and how fast it is, and you can make just fast money with it and make sure that everything is perfect. So you can see it was 90% of winning ratio in 150 trades. It was 135 wins against 15 loses. You have won like 250k something dollars, and then you've lost like 14k, and you have paid like 8k for the fees, and then your net profit is going to be this amount, which is crazy good. So did you like this video? If you really like it, please share it with your friends. If you haven't subscribed to my channel, subscribe right away, and by turning on the notification bell, you're going to be the first to be informed when I'm uploading a new video, which I'm doing on daily basis. If you have any questions, just feel free to ask me down in the comments and share your ideas with me. If you test these strategies and you come up with something rather than I tell you, just share them with me. I'm an open book. Just shoot. Thank you so much for watching. See you in the next one.